Greetings everyone. Welcome back to accounting tutorials for you. So this video in particular seeks to break down and simplify, the process of, disposing of or selling an asset, right? So do you know that an asset can be sold in three ways? We can sell it for cash, we can sell it on credit, or we can exchange it for a new one. And that process whereby you are exchanging your existing asset for a new one is called a trade in. So you can sell that asset for cash, you can sell it on credit, or you can exchange it through a trade in. Let's look at the constant and non-changing steps of the asset disposal process. So, for example, this process is nothing other than your general journal for asset disposal. What are we doing in the general journal? We are journalizing all the transactions that relate to a specific asset. Right. Or perhaps not in this instance, yes. So we are generalizing all the transactions that relate to a specific asset in this instance, right? For example, let's go. What does step number 1, 2, 3, and 4 say? Step number 1 says you must get rid of the cost. Step number 2 says you must get rid of the accumulated depreciation. Step number 3 says you must get rid of, rather you must recognize the selling price. You must recognize the selling price. Then the final step, which is step number 4. Now, this is whereby you are determining whether you have made a profit or you made a loss on disposing or trading in this asset. Okay, let's go back to step number 1. How do you get rid of the cost? Remember, assets increase on the debit side all the time. So when you are selling an asset, that means your assets are going to decrease. On which side do your assets decrease? If they increase on the debit side, that means when you are selling it, they will decrease on the credit side. The vehicle account, or the main account that we are going to use here in our asset disposal process is the account called asset disposal, because that's the main account that will enable us to determine whether we made a profit or we made a loss. Once again, let's go back to step number 1. Step number 1 says we must get rid of the cost. Now, I said the account that we are going to use to derive the whole process is going to be asset disposal. So, let's go. If you are getting rid of the cost, that means that particular asset is going to be credited. What sort of asset would you happen to sell in your company? You can sell one of your cars, you can sell one of your equipment, you can sell one of your machinery, you can sell one of your furniture. So any of those 4 assets I've mentioned, if you are selling it, then you are going to credit the asset with the cost, the original cost with which you had purchased this asset originally. You credit the asset, and then of course you debit asset disposal. I want you to look at the common trend that I'm painting out for you here. The trend is this blue amount, that is this account that's written with blue: asset disposal, asset disposal, asset disposal, asset disposal, asset disposal. So whatever you are doing, you are going to double it, with asset disposal. So your contra account for each and every step is going to be asset disposal. Your contra account for every step is asset disposal. So we said with step number 1, we are getting rid of the cost. How do we do so? We are going to debit asset disposal, our contra account. Then we are going to credit whatever of those assets that we are selling. I said we can be selling our vehicles, we can be selling one of our equipments, we can be selling one of our machinery, we can be selling one of our furniture, any of our depreciable assets. Then you go to step number 2. Step number 2 now is whereby you are getting rid of the accumulated depreciation of this particular asset. accumulated depreciation is a negative asset. A negative asset, by virtue of its name, is going to increase on the credit side because it has a negative impact on our positive assets. So accumulated depreciation always increases on the credit side, but when you are removing it, you are going to record it on the debit side, which means the accumulated depreciation of the asset we are selling is going to be debited. And then our contra account, as usual, is going to be asset disposal. Then you go to step number 3. Step number 3 is whereby now you are recognizing the selling price of the asset that you are selling. So how much are you charging for this particular asset? How much are you charging the buyer? So I said earlier on that you can sell a depreciable asset or any form of asset. You can sell it either for cash, you can sell it on credit, or you can do a trade-in whereby you are exchanging it for a new asset. When you are selling it on credit, you are going to debit debtors control. You are being owed money there. Your debtors are your asset because they owe you money. So you are going to debit debtors control if you are selling it on credit. If you are selling it for cash, you are going to debit your bank. If you are selling it for cash, you are going to debit bank. If you are trading it in, and of course, for you to buy the new asset, you took a higher purchase loan, then you are going to debit the higher purchase loan account. You are going to debit the higher purchase loan account, and of course, you are going to credit asset disposal, because asset disposal is our contra account all the time when we are selling an asset. Then you go to the last and final step, whereby now you are determining whether you made a profit or you made a loss when you were selling this asset of yours. How will you know if you made a profit, and how will you know if you made a loss? Here is the easy comparison. If you made a profit, your selling price of this asset you are selling is going to be greater or bigger than the carrying value of the asset you are selling. How do you get a carrying value? It's the cost from step number 1 minus the accumulated depreciation on step number 2, then you get your carrying value. If your selling price, once again, is bigger than your carrying value, then you have made a loss on sale or trade-in of your asset. And then if you made a profit there, then you are going to say what? If you made a profit, you are going to debit our normal contra account, which is asset disposal. Then you're going to credit profit on sale. You are going to credit profit on sale. Why are you crediting profit on sale? Profit on sale is an income. All our income accounts in accounting, they increase on the credit side. So that's why you're going to debit asset disposal and you credit profit on sale, because profit on sale is an income. If you are doing an income statement or your statement of profit and loss, your profit on sale is going to be reflected under other income. Scenario number 2 is whereby now you made a loss on disposal or trade-in of your asset. How are you going to go about to determine when you made a loss on disposal or trade-in of your asset? You're going to go to step number 1 and step number 2, get your carrying value. You say cost minus accumulated depreciation, then you get your carrying value. Now, if your carrying value of the asset that you are selling is greater or bigger than the selling price of the asset that you are selling, then that means you have made a loss on disposal or trade-in of this asset. If you have made a loss is an expense, which means under your operating expenses in your income statement, you would add another expense there. This other expense is going to be called loss on disposal or loss on sale of asset or loss on trade-in of an asset. How are you going to get this loss? You're going to say carrying value minus selling price. And then, of course, if it's an expense, our expenses always increase, or rather they always decrease our owner's equity as per our accounting equation. On which side does our owner's equity decrease? Our owner's equity always decreases on the debit side, which means then you must debit the expense. Hence you are saying debit loss on sale, then you're going to credit your asset disposal. This is your process for the asset disposal process. The only hectic or difficult step of this process is step number 2, whereby you have to determine the accumulated depreciation of that particular asset. But if that asset, for example, we have 3 scenarios. If that asset is sold at the beginning of the year, that's easy. You are just going to take the accumulated depreciation of this asset that you were given from the information, or you are going to count it from the year it was purchased until the beginning of the current year. But if this asset was sold during the current year, that means you still have to calculate depreciation for the current year until the day it was sold. Then you're going to add it with your accumulated depreciation that you had at the beginning of the current year. If you sold this asset at the end of the year, then that means you are going to have to depreciate this asset for the whole of the current year, which means you're going to calculate depreciation for the current year for 12 months. Then you're going to add it to the opening balance of the accumulated depreciation that you had for this particular asset that you are selling. Hope this is clear and vivid enough.